All right, students, welcome to today's mentorship class. Today we are going to deep into supply and demand, refinement, and after today's session, you will learn entries and you will get to know how entries work. Entries will become cleaner, sharper, and more consistent. We'll study 4 entry modules from the basic to the advanced ones I personally use. So the part one of this is understanding normal supply and demand zone. Supply and demand is not just a drawing a box. It's about understanding where did institutions buy, where did institutions sell, where did inefficiency stays open, where did liquidity grab is, where was liquidity taken before the move. So a normal supply and demand zone is created when the market takes liquidity, creates a displacement move, leaves an origin point, which we call zone or supply or demand, and then comes back to mitigate it. A lot of traders draw zones everywhere, but a correct zone has liquidity before the move, clear displacement, clean zone, not tested many times, in trend direction. So entry model 1, basic tap entry, normal supply and demand zone is simplest entry. You identify a valid breakout structure zone and take a limit order at the extreme. Entry rule should be valid zone, trend direction only, no high impact news. First time tap, stop loss below above the wick or below the demand or supply zone. This is best for beginners. Probability is medium, but RR is okay, fine. So let me show you the first entry model, how it looks. First entry model looks like this. Let me do. First the market is uptrending, okay, then comes down, then up. We have our demand zone here. This is our demand zone, and we have a clean breakout structure to upside. And then we put our entry at this demand, and put our SL a little bit below this zone. Then the market comes back, taps the entry, and goes up following the trend. OTP should be this high, recent high, this high. This was the bullish example. Now I'll show you the bearish example.
TP is always going to be the previous high, or are we going to consider till the next supply?
It's your choice. You can, if the trade is swing, you can target the high time frame highs. Understood? Now here we have our supply zone. Then we simply put our entry at this supply zone as a little bit above and target the recent low. So then the market comes up and taps the supply zone and goes down. So this was the entry model number 1. In this model we need a trend direction. So if the trend is bullish, the market moves up aggressively, then we mark our demand zone here, and then market goes up, gives a breakout structure, then comes down into this demand and flies again. Here in this bearish scenario, the market moves down following the downtrend, and then we have the order block or supply zone, whatever we call it, POI. So market comes into it and falls again. This was the entry model number 1. Take a screenshot or draw it on your notebook.
Can you just close it so that we can take a screenshot? I'm stuck.
What's stuck? Is it all right now?
Yes, yes.
Yeah, take a screenshot or all right. Have you done?
Yes, it's done. Thank you.
Yes.
Now we have the entry model number 2. Okay, let me remove this. Now the entry model number 2 on supply and demand. The market moves up and comes down, then goes up. Here the market has moved up. Okay, we have a clean break-in structure here. Suppose it's a 4-hour time frame. Okay, now we have our demand zone here. We have the clean demand zone. Then what happens? You wait for this zone. Okay, this is on 4-hour time frame. Okay, then you switch to 15-minute time frame. Then market
Sorry to interrupt. I just wanted to understand
yeah,
the entry model one which you just told us. Is that going to be tap and go, or how is that entry
yeah,
going
yeah,
to be?
yeah, tap and go. That's for
Okay,
higher time
that's
frame only, not for
higher time frame like what?
daily, weekly, whatever. Higher time frame only.
Okay, not less than daily.
Yeah, 4 hour is okay. From 4 hour,
Okay, so from 4 hour to weekly you can consider
yeah,
any.
yeah, yeah, yeah.
Okay.
Now this is like 4 hour entry. Okay, I'll show you. This white color zone is 4 hour. Okay, the path I have created here. Now in 15-minute time frame, market moves like this, comes down, then goes up without tapping into this demand zone. Market comes down and taps into it. You can take the entry right here. Okay, and the second type, it's the second entry model. So market gives an breakout structure to upside, then comes again, tapping this 15-minute time frame demand zone, then flies again.
Sorry, I didn't understand. Can you repeat again?
Wait, I'll tell you. See, when the market is bullish, okay, on 4-hour time frame, okay, we got a breakout structure here. Then without this zone, we have already marked this demand zone. Okay, then in 15-minute time frame, the market came down and didn't tap this zone, and then goes up, then comes down again, taking this low here. Okay, the market tapped into the 4-hour time frame demand. Okay, you can take the entry here also, but we have switched to 15-minute time frame for our high RR. Okay, then market gave the breakout structure here in 15-minute time frame. All right, then market created the demand zone, another one here in 15-minute time frame, then tapped in date. We can take the entry here with confirmation, with good confirmation. I mean internal breakout structure in 15-minute and in 4-hour too. All right,
Yes.
so this was the bullish scenario. Now I'll show you the bearish scenario. Here the market comes down and gives a breakout structure right here in 4-hour time frame. Then we have our supply zone here. All right, we have the supply zone here. Then in 15-minute time frame, the market comes like this again, same way, then comes down, then taps into this zone, and then gives breakout structure in 15-minute time frame like this, then taps into the 15-minute time frame demand zone here, right here, and then goes down. We have the 4-hour breakout structure. And we also have the breakout structure in 15-minute time frame, which is our internal breakout structure. Now we have here another supply zone in 15-minute time frame like this. Then we enter from this supply zone, put our SL here. Either we can put our SL here and take entry from this zone too. This is just for the confirmation and the best RR. And put our TP at this recent low.
When you say about confirmation, what confirmation is it going to be?
It's the 15-minute time frame confirmation.
Okay, 15-minute POS, and is that going to be a candlestick pattern or how is it going to be?
It's going to be like this. The move comes from this
Okay.
zone, then
Okay.
falls down, then gives this breakout structure here.
Breakup structure again goes back to 15-minute supply.
Yeah, then drops aggressively.
Okay, so 15-minute we are going to take an entry, tap and go entry. It's not going to be a candlestick confirmation.
No, 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 no.
Okay, perfect.
Yeah, we'll target the 4-hour low, recent low in 4-hour here too. the same way. This was the entry model number 2. Take a screenshot, okay? Let me remove this.
A quick recap of just the entry model number 2. I just wanted to understand. The first supply is the 4-hour supply.
Yeah,
After that, we are going to wait for a break of structure.
yeah,
We are going to go into 15-minute time frame.
yes,
Then after that, we are going to find a 15-minute supply.
yes.
After we get a 15-minute supply, we are going to wait for an aggressive entry that's going to be tap and go.
Yeah, in 15 minutes.
Okay, in 15 minutes.
Yeah.
And once it is tapped to that zone, we will directly wait for the previous low. That's going to be a TP.
Yeah,
Perfect.
yeah, yeah.
Okay, thank you so much. Same is going to be for bullish structure.
Yeah, bullish and bearish
Oh,
both.
perfect, perfect.
Okay, fine. Now we are going to talk about the entry model number 3, okay? Have you took the screenshot of this?
Again, yes, screenshot is taken. Again, sorry to interrupt. I just wanted to understand one more recap of model number 1.
Yeah,
Model number 1 is just going to be a tap and go entry from the higher time frame. That's going to be 4 hour and above.
yeah.
I just wanted to understand one more thing. If the supply is of 300 pips, like the whole candle.
Now the same question you are asking, I'll teach you the same method now.
Okay, perfect.
Yeah. Let me remove this first.
Because right now the markets are very bad. So right
Yeah.
now we are getting 400 pips, 300 pips of a demand or a supply. So I just wanted to understand how can we take an entry here.
Yeah, I'll show you.
Okay.
In entry model 3, okay? In this model, the market, let's take a bullish example first. The market moves up. Wait a second. The market moves up, then comes down, then gives a break of structure to upside. Fine. Then this is the 4-hour time frame view, okay? We got a break of structure here. This is the 4-hour or higher time frame, okay? For you, the question you asked. This is the break of structure here. Now in lower time frame, what market does? It's for me the 4-hour time frame. Now I am putting the 15-minute time frame zone. Then market comes down, goes up, grabs this liquidity here, and then comes down and creates liquidity here, like this. And then comes down to our demand zone. Then goes up.
There was another doubt here. Can I just ask?
I'll tell you, wait.
Oh.
Our demand zone is here. So this is our demand zone. Let's say it's a big area, okay? We'll take the 50% of the zone.
For example, it is a 400 pips demand area.
Yeah.
So we are just going to wait. We are going to put a Fibonacci tool and we are going to wait for the 50% area. Once it taps into 50% area, we are going to enter.
Yeah.
And if it doesn't tap and it goes from the above level, we are going to leave that entry, or what is it going to be?
See, when the market taps into this big area, okay? After that, you have to switch to lower time frame, okay?
Okay.
Because the demand is already touched, okay?
Okay.
Then you watch in lower time frame. You will get to know there what is the confirmation, what is going to be, market changes direction in lower time frame, like 1 hour, 4 hour, 30 minute. So you can
Okay.
enter from that area in
Okay.
lower time frame.
Can you give us a real chart live example?
You are only asking live. I'm telling you, these classes are for diagrams first, then
Okay.
it will be live classes.
Okay. Okay.
Even I'll show you the live from day to day charts, from day to day charts, live charts.
Okay. Got it.
Yeah,
Sir, what you are drawing, is this on 15-minute time frame that is coming down?
yeah.
Okay.
This is just the entry when the market sweeps the liquidity, taps into this big demand zone with 50% area, then goes up, without showing the confirmation here. I'll tell you what is the confirmation here. Okay, that's the hidden confirmation. Okay, here we have the buy side liquidity. Here we have sell side liquidity. Market came down and tapped the 50% area here. We'll target this high. This one.
Are we going to keep any buffer under the demand zone, or how is it going to be? How are we going to place our
Yeah,
stop loss?
a 1 2 pip below.
Okay. So now, just to understand, if the demand is ending at 3,222,
Okay.
we are going to keep it at 3,220.
Yes.
Okay, perfect.
Yeah.
But liquidity sweep and all, if there is any chance.
The liquidity sweep is already done here. Here. The liquidity is sitting here.
Acha.
The market has first. I told you the hidden confirmation is here.
Mm-hmm.
We have this breakout structure like this. See, in 15-minute time frame, when the market moves like this up and down
Yeah.
without tapping the demand, the market gives first breakout structure. Fine. Here in
Okay.
15-minute time frame, that's the confirmation for us. Okay.
Hmm.
So then market taps the 50% of demand zone and then flies. Fine.
Okay. Got it.
Yeah. This was the
Just wanted to understand, if I'm marking demand and supply on 1 hour,
okay.
do I have to go to 15 minutes for same confirmation, or 5 minutes?
You have to go to 5 minute. You can go to 15-minute too. That's not an issue.
15 and 5 both can be done.
Yeah. People say 5 minute. I think both are good.
So
15 minute and
basically,
5 minute.
basically the confirmation is only going to be a breakout structure and a 15-minute supply, tap and
Yeah.
go. That's all.
Exactly. Yeah.
And if it's a bigger zone, then we'll have to wait till 0.5, the 50%
Yeah. The
area, and then go for
50%
a
of
tap and
zone.
go.
Yeah.
Okay.
That's it. So this was the bullish example. Okay. So take a screenshot of this diagram. Okay. Done with screenshot.
Yes.
Now I'll move to the bearish example. Okay.
Yeah.
All right. So now and the let me remove this. Now in bearish example, we are going to draw from 4-hour time frame first. Okay. The 4-hour time frame is bearish. We have the clean 4-hour breakout structure to downside. This shows the market is bearish. Then I'll draw the 15-minute zone.
There was another doubt here.
Yeah.
So, if how can we understand or how can we identify that if the zone is going to be big, like 50% area, if the zone is of 100 pips?
Yeah.
So, are we going to go for tap and go, or are we going to go for always the 50% area and then
If the area, see, if the area is big,
big, like
yeah,
from what, like 200 to 300 pips or 300 to 400? Like, is it going to be above 200 pips, or how is it going to be?
above 150 pips.
Okay, above 150 pips,
Yeah.
it's always wait for a 50% zone area and then go for tap and go.
Yeah.
And if it's below 150, then it's always tap and go.
Yeah.
Okay,
You
perfect.
can take confirmations that time. That
If I'm going on 1 hour, then I can come down to 5 minutes, take a confirmation, and then do it.
Yeah.
And if it's more than 150 pips demand area, then I'll have to do it for 50% area.
Yeah. Yeah.
Okay, thank you.
So in 15-minute time frame, let me draw the supply zone first. This is the supply zone. So in 15-minute time frame, the market moves like this. I'll show you. Like this. And starts creating liquidity here. Then goes down, then gives a breakout structure to downside, and then taps into 50% of the supply zone, and then comes down again, and then continues to move down. Here we have the liquidity. See what happened here. When the market came up again in 15-minute time frame, the market created liquidity here, and then takes that liquidity. What happens here when the liquidity is taken from upside without tapping the zone in 4-hour time frame? The market comes down and gives break-in structure to
Sell side.
yeah, downside, like this.
Yeah.
What often happens? People do one thing incorrect here. See what they do. They put their demand here. Are you getting me? Here.
Yeah.
Then the market breaks their SL, and then they say the market has grabbed the liquidity here and then goes down. My direction was okay. What happened here? This was the reason, and this is the reason this happens. They don't see 4-hour time frames here. So the market came up to 4-hour time frame demand zone, sorry, supply zone, then taps into the 50% zone of demand, targeting this recent low. SL should be little bit above. So this is the easy 1 to 8, 1 to 7, 1 to 5 trade. We'll target this low here.
There was another doubt here.
Yeah,
As you said, the market will tap into the 4-hour supply.
yeah.
So after tapping into the 4-hour supply, we are going to take a confirmation from. Are we going to wait for a smaller time frame breakout structure, or are we just going to go for tap
We
and go
have the
from?
see. When the market created liquidity here, then
Yes,
market
correct.
goes up. People think market is going higher, right?
Correct.
The retail traders think the market will go higher and higher. Okay,
Hmm.
but the market takes this liquidity, right? This liquidity here,
Yes, correct.
and then
Yes,
and then the buyers think from here the market will go higher. They
okay.
target the all-time high, but the market is already bearish in 4-hour time frame. As I said, the market taps into this zone and takes this liquidity here. So here are sellers whoever got trapped here. They think the market will go down. Then they get their SLs hit there on this zone right here. Then market goes up. SL hits their SL is taken. Then market taps this 50% zone in 4-hour time frame. Then goes down. That's how it works. You have to think like this: where the SLs are, where retail traders are taking the entries. You know,
No,
that's how.
I didn't understand this. I think it's a little confusing.
Where are you confusing yourself?
See, now once the buy side liquidity is taken,
Yeah.
the market again drop downs and it takes a breakout structure on 4-hour itself, correct?
No.
As the time frame we
No.
are
No. No.
viewing
No.
right now is 4-hour.
15 minutes.
No. This is
Okay.
white zone is 4-hour time frame.
Okay,
This
the
part.
red zone is 15 minutes.
Yeah.
Okay, so once a 15-minute breakout structure is given after buy side liquidity,
Take na.
so but the market is again going to go back to the 4-hour supply.
Yeah.
So once it enters the 4-hour supply, we are going to draw a Fibonacci tool and we are going to wait for it until it
Exactly.
taps the 50% of the area.
Yeah.
Once it taps the 50% area, then we are just going to wait for the previous low as the TP and SL above
Exactly.
the supply zone.
Yeah. You're right.
Correct?
Yeah.
Okay, okay.
So this was the bullish example. Okay.
Bearish, no?
Bearish.
Sorry,
Bearish
bearish
example.
example. Okay. Now I'll teach you the fourth entry model, fourth and the last entry model. Okay.
Yeah.
I'll tell you what will be in higher time frame, daily and 4-hour time frame, and what will be in lower time frame like 15-minute or 30-minute. Okay. Have you took the screenshot of this diagram?
Yeah.
Yes, taken, taken.
All right. Let me remove
Sir,
this.
I have a question.
Yeah.
Sir, after BOS, so many times it happened that the demand zone of the market is correct,
Uh-huh.
but the market still break it and hits our stop loss. What is the reason behind that?
That stop
It
loss
is
is
because of
this.
leftover liquidity behind it.
No.
Then
When you analyze the chart perfectly, it
yes,
will not hit the SL because some people put their supply zone here like this. Then
yeah,
the market gives a move to upside to get into this zone because this is the real POI where we have to enter the trade. This is
Oh,
not. Here we are looking for a big picture like 4-hour, then 15-minute. Here people see only 15-minute, then the SLs get hit again and again.
okay.
Yeah. So let's move to the fourth entry model now. I'll draw a diagram showing the bullish move, okay, in 4-hour and daily time frame. This will be the 4-hour and daily time frame. This is our high, another high, another high. This is the low. Here we have another low. Here another low. So what happens in bullish trend when it's daily time frame, okay? The clean breakout structures. here we have our higher time frame demand zones like 4 hour daily. This was the 4 hour and daily time frame. Okay, now I'll show you.
The two demands you have drawn both are 4 hour and daily.
Yeah,
Okay.
higher time frames. Fine. So now I am using the lower time frame. So yeah, in 30-minute and 15-minute time frame, the market moves like this. Goes up, gives a breakout structure, which is already in daily time frame. Fine. Then it comes like this, taps the demand here, and then goes up, comes down, then breaks this high like this, and then comes down here, then comes down again and gives respect to this demand zone here. Then market comes up, down, then breaks this high, which is the another breakout structure in daily time frame.
Is it going to be daily time frame or 15-30 minute breakup structure?
I'll tell you, wait. So market moved up. From here, the market again comes like this, then goes up again, and then respects this demand here, and then breaks again and moves up. Let me first clear all this. See, this is the demand. This is another demand. Here is another demand. This is the first breakout structure which we have in daily time frame.
So all three are going to be a smaller time frame demand, right? Either 15 or
Yeah,
30.
yeah. It's like following a trend. We are following a trend and taking entries on different demand zones. See how it looks in daily and 4 hour time frame and how it looks in lower time frame in 15-minute time frame. So we take the first entry here and take this high as our TP. Then we can take another entry from here and target this high, the recent high, which you can cleanly see in daily time frame. There it will be the move of the some candles. In 15-minute there will be a lot of candles. So yeah, it looks like this in lower time frame. Fine. So let me write down here. Write down, wait. It will be easy, okay?
Yeah.
This is the daily time frame or 4 hour. This will be 15-minute or right 15-minute or 30-minute time frame. All right, take a screenshot of this.
Yeah.
The same thing happens in bearish moment. Okay. Daily and 4-hour time frame. This is the breakout structure here, and another breakout structure here. This will be our supply zone. Here,
There was another doubt here.
yeah.
So once after every BOS, there is going to be a supply zone on that swing, correct?
What?
After every BOS,
Yeah,
there is going to be a demand or supply on that zone.
yeah. On
So
high, see, on higher time frame, the market looks clean. There you don't need any confirmation or like that. In lower time frames, you need confirmation. On higher time frame, the market is clean. It taps, moves. Okay, it gives a clean breaker structure, then comes down to demand or supply zone, and then moves again. But the thing is, the zone is bigger. Fine. Now let's talk about the lower time frame. Here, the market comes down, goes up, breakout structure, comes up, come like this, and then taps this demand supply zone, gives breakout structure again, comes up, comes down, whatever comes up, comes down, then taps this demand supply zone right here, gives breakout structure again, comes up, down, just manipulating the retail traders here, comes up, then comes down again, then taps this demand supply zone again here, then goes down, following the trend. This is the sorry. This is the first breakout structure here, right here. Market came up, tapped this zone, goes down, takes this liquidity, then gives breakout structure here. Let me mark the supply zones. See, got the breakout structure. Market came down, gave us this internal breakout structure, then moves like this, manipulating the retail traders, then taps and comes down again, giving us the new breakout structure here. And then market comes again up to this zone, like this, falling down, giving this TP, then manipulating again, then taps again into this zone, and then falls again. This will be our final TP. This was on lower time frame. Let me write it down. "30-minute time frame and 15-minute time frame." So this was all about today's class, and this was all about supply and demand entries we use. Fine. All right, guys. Today you learned the 4 entry models that decides 99% of your trading results. So fine. Without understanding these models, you will always be confused in entries. Use these right model for the right market condition because the condition changes. That's why there are these 4 entry models. Fine.
Another question.
Yeah.
So once these 4 models are done, can we
Yeah.
just go to the charts and backtest and send you some charts? Can you
Yeah,
please
yeah,
reply for
obviously you
as well?
can. Yeah, you
Okay,
can.
perfect.
Yeah.
I'll just go, I'll just see, I'll backtest everything. Once the charts are done, I'll just share it on the Discord. You just let us know if it's correct or wrong.
Yeah, yeah, fine.
Okay. Yeah.
So see you in the next class, okay?
Thank you. Good day.
Have a good
When
day.
would next class?
Yeah,
Next class, when would it be?
maybe tonight or
Oh,
tomorrow morning.
Can you keep it tomorrow? Tonight will be a little difficult.
No problem. I'll take it tomorrow. Okay?
Okay.
yeah,
Thank
sure.
you.
Yeah, take
Yeah.
care.
Yeah.
Okay, bye.
Bye.